What's happening, everybody? It's your boys, Steve Straza, Sean McLaughlin, back after a 1 week hiatus. Back by popular demand, Straza. There were people on Twitter demanding the Flow Show today. I don't know if you saw that.
I get it. I mean, this is my favorite show. I don't know about you, but the lack of any script or any idea of what we're going to talk about, I think makes a lot of fun for
You
us.
do a lot of shows, but this one is the easiest because we don't have a plan.
That's also what I like about it. There's no prep for this show.
And it's especially fitting today because before we went live here on camera, you and I were both kind of lamenting the fact that Izzy, if you want to pull up my chart here, I got the S&P 500 chart or SPY chart showing up, and if you look at the last, I don't know, 3-4 weeks of market action, I mean, this is about as sleepy as it gets. I mean, we had a couple little scary spills, but they still stayed in the range. And man, there's just like it feels like nobody, bears or bulls, want to take any aggressive positioning here. What's your feel?
You know, I love it. It's a great point. So when I see, ranges contract like this, like we're seeing in the S&P 500 over the past, month or so now, I like to look at the Bollinger Band width in order to measure the volatility, right, in that market right now. S&P 500, the Bollinger Band width has not been this tight since late 2021. You can see it, Izzy, if you throw up my chart right now. You'll see the Bollinger Band width in the lower pane. So, yeah, I mean, what do they say? From contraction comes expansion, right? So whenever the Bollinger Bands get this tight, right, and you see that, absence of volatility, typically it precedes a period of larger than usual volatility, right? And what direction that move will occur in is what we don't know.
You said that far more elegantly than I did today on Twitter. I said, "From coils come springs."
I like that one.
Yours sounded much more professional. Well done. All right, so we got a market that's just kind of going sideways. I mean, my spidey senses tell me that we're setting up for a big move. I don't know which direction, but I feel like a big move is coming. It might be. I hear that people are chattering about something going on in Washington with a debt something or other, ceilings or floors. I don't know. I don't pay attention. Who cares? It's just noise. Sounds like maybe that's what people are waiting for, some resolution either way on that. And maybe that's what gets the market moving. And it could be big. I mean, like you said, with showing that chart that you have there, that SPX, showing those Bollinger Bands tightening up like that in a way that hasn't been this tight in a long time. Sure, it could stay this way even longer. As they say, markets can stay rational longer than we can stay solvent, or irrational longer than we can stay solvent. That's not exactly relevant here, but my point is we could stay in a tight range for longer and frustrate bulls and bears equally. But I don't know, man. I feel like something's brewing. And you were mentioning earlier, I brought this up to you earlier today, that you had the feeling that if this does resolve soon, it's likely to resolve higher. Tell us why you think higher is where your gut is telling you to go.
I'm seeing more and more bases, more and more reversal patterns that, look similar to the one in SPX. If you zoom out, right, we got the 200-day moving average curling up. Those August highs are kind of, within view. I'm seeing more and more of these reversal patterns resolve to the upside, right? And as that list continues to grow, I'm continuing to lean more and more on a bullish resolution for the major averages as I see more and more components resolve. And I think the best example from this week is just tech, right? XLK now trading at new 52-week highs, completing that base. Well, guess what? The two largest components of XLK are also the two largest components of S&P and NASDAQ 100, right? So they're going to be driving those indexes higher too. So I continue to just watch those August highs. I think we get there. NASDAQ probably looks a little bit better than S&P right now. But again, XLK tech, at least from a weighting standpoint, there is not a more important sector. So getting the upside resolution there, I think, is big.
This move in Google right here that I'm showing on my screen definitely helping the NASDAQ. This is a big move for Google today, which is building on the big move that started last week.
Right. And that's what I'm seeing. It's these big weights, right? These big tech names keep breaking higher, whether it's Amazon this week or Google last week, right? Apple the week before, Microsoft, Meta's already been working. these components are such large weightings that it's going to be hard for the index to not break out of a similar reversal pattern if all of those are.
Now, I don't know if you want to show this week's options flow list.
Yeah.
We were both kind of complaining that there's not much on there right now, which kind of, I mean, look at that's the smallest I've ever seen that list, Straza.
I think something must have happened. I'm talking to Milton about it. I don't know if this is the full list, but it's what we got right now. It's what we got to work with. So either it was a really sleepy week or somebody dropped the ball on getting the unusual options transactions onto our list. So let's just use this. I don't necessarily have any stocks that I love from this list, but I do have two that I hate. Let's start with the one with bearish flow. You see PacWest on here yet again. Continue to see, puts on the offer, calls on the bid in this name. They actually went out to June 7 strike with these calls on the bid. But just look at this chart.
Oh,
you don't touch this. So, I mean, somebody's probably making some good money on these bearish calls because they've been on our list for several weeks now, but not for me. And I know for you, you're going to say, why not just short the stock? It's already a put option.
No. I would say if I wanted to get long this thing, I would want to buy the stock. But if I wanted to get short here, I feel like actually buying the put, even though the put premiums are going to be juiced, I feel like that's actually the better move because, I mean, this thing could double overnight on any headline, right? I mean, any of these banks that have just gotten destroyed over the last couple months, they're one headline away from an overnight doubling, right? So I actually, if I wanted to get aggressively bearish on this, I would look at some kind of put or put spread for sure.
I mean, these charts are really, to me, they're uninvestable, right? Like, I don't want to, basically, if you're buying or selling a specific individual regional bank right now, you are making the bet that you can forecast whether or not bank runs will happen in the future. That's just not, like, for me, I know for you too, like, that's not a game that we should be playing here. That's gambling. Have fun, but no thank you.
Yeah, we don't really have a good way to manage our risk in that scenario.
Exactly. So another crappy one, Zoom Video, bullish calls. They're hitting 64, 65, 66, 67 calls on the offer. Last week, very, very short duration calls. But look at this thing. Back below the COVID lows here. I'm sorry. This is the pre-COVID lows from 2019. Zoom looks really bad. And to me, it looks particularly bad, right? Because a lot of these growthy, techie names are starting to trend well and break out of these reversal patterns that we keep talking about. Zoom is in that group, yet it's not acting the same way as, the leaders are. It's quite the laggard. So,
well, it looks to me that that aggressive buyer on May or last week on the May 12 expiration looks like he had a close but no cigar because on Friday it looks like it closed at about was it 63.69? It looks like the closing price on the 12th. So every one of those calls expired worthless. So I mean, you think that was someone taking a flyer on some kind of late week rally? I mean, it was rallying heading into the end of the week. It's hard to tell. I mean, it's hard to tell if that was a speculative, end of week run bet or if that was someone hedging a short position into the end of the week. Tough to tell.
Yeah, sometimes you get a ramp ahead of earnings like we did. So maybe they were betting on just a short-term move. Not quite sure. Let's talk about one more, moving on from Zoom. CleanSpark. That's CLSPK. New name for me at least.
Yeah, me too.
CLSPK. I'm sorry.
I'm looking at the options here since it's like you said, it's an unfamiliar name.
This is a small one, so just disclaimer. Position size accordingly. This is a low float, low liquidity stock. I didn't know that when I threw it in the deck.
The options are pretty tight though.
Really?
300 in June. In June and September expirations, we got pretty good open interest, and the bid-ask spreads are a dime wide, which is that's you could work that. You can get filled in the middle there.
I just found out why. You want to know why it has a liquid options market?
Why?
This one is for the junkies. This is a Bitcoin mining and energy technology company. So,
load the boat, Straza.
So yeah, just when you thought it was over, there's Bitcoin miners that I haven't even heard of. So CleanSpark, reason I like it is because it's got that base, right? You've seen the relative trend turn, absolute trend. So good looking chart.
Eh,
If
That is a good
if you
looking
were going
chart.
to do it, would you just go long calls with something like this, or would you do what have we been doing? Call calendar spreads for these bases?
A call calendar spread is actually an interesting idea. I don't hate that. Let me look at these options again. I mean, the problem the problem with this being a low priced stock is that once you get the stock's at 436, right? So you're looking at buying basically the five strikes and selling the five strikes. Once you get outside of that, unless you go to December, you're not getting much premium in like the 7.5 or the 10 strike. Um, I mean, I, since you put that thought in my head about the calendar spread, I don't hate selling the June 5 calls and using that to finance the December 5 calls. I mean, that net cost would be about 70 cents. Let's see. I'm too lazy to do
A
the
little
math
time
myself.
before we really get that resolution, then we get it, maybe get a nice leg higher, and we're already covered.
Yeah, it would cost us under a buck. It would cost us 90 cents to put that June, December five strike calendar. It costs us 90 cents. So basically, as long as we don't get, as long as the June calls expire away worthless, which is that's a big question mark right now. But if they did, then all we needed to do is get up north of 590 by
And
December
the short calls would be what strike?
at five.
Okay, they're both five, right? Okay.
Yeah, and that's
So
really
if
the
the
only place
base
you're going to
doesn't
get
break
premium.
out, they maybe expire worthless, right?
Right.
Right?
Yeah, I mean, if you're going to sell, that's really the only place you're going to get premium in June options is at the five strike because right now those June options, the 7.5, so I mean they're bid 5 cents. You're not going to get any
I
juice
like
there.
that because if the base just continues to build for a month, I think that trade works out pretty well, right? If we get some sideways for a month, then a breakout, isn't that ideal?
That's ideal. And you know what? Here's an interesting thing that could play in the favor of this. And I'm not saying that it would, but it could. When you put a calendar spread on, whether it's a call calendar spread or a put calendar spread, it's technically a position that is long volatility. So that means if volatility were to rise, the option that you're long in the back month would increase in value faster than the short option would because it has more time to expiration. So the rise in implied volatility affects that price more. And so in a stock like this, a super low price, it's kind of I don't want to call it a meme stock, but it certainly has meme stock potential because it's in the Bitcoin space and mining space.
Mhm.
If this thing were to, start threatening to pop above the this 515 level that it's touched twice in the last month, you might actually see volatility in those longer dated, further out options rise because all of a sudden all the gamblers are coming in bidding up the price of these calls. So even if this happens quickly and our short June 5 calls go in the money, we might not, it still might actually work out to our favor because the back month might get juiced, which could help.
And now, how would you typically manage a trade like that? If you get the breakout above that five level, would you look to cover the short contracts?
So typically when I put on a calendar spread, especially if I'm doing it like has a directional bias to it, right? Like I'm buying the strikes that are above the current market price. In this case, we're buying the five strike when the stock's trading at 437. When I'm doing that, typically what'll happen is if the stock trades up to my strike prices,
Hmm.
meaning it's moving my direction, and I still have the short option on,
Yeah,
then in most cases I will just close the trade and
take a little loss
90,
on it.
90 times out of 100, that'll be a win. The size of the win will depend on how close we are to expiration, date wise. If we're 3 days to expiration, I'll make much more than I would if we were still 3 weeks to expiration. But I'll close the entire spread at that point because the P&L graph of a calendar spread, it looks like a TP, right? Once you get and it points at the peak of the or it peaks at the strike price. So once we get above the strike price, we're actually on the downside of that peak, and our P&L potential actually decreases as the stock moves further and further away from our strike, even though the stock is going up and we were bullish. So if I still have the whole spread on and we hit the strike, generally speaking, I'm going to close it down and take whatever gain I have. Hopefully it's a good one, but not always.
I like it. I like this one.
All right. Well, hey, look, we found something. You and I were both bearish going into this call, bearish about finding a good idea. But hey, we got an idea that might scratch some itches here. So, all right, this is called Clean Spark, a stock that you and I had never heard of until 10 minutes ago. So, kudos to us.
And I'd never have any problem finding things to say, Sean.
All right. Well, sorry for those of you who are waiting for us for 2 weeks. You know, we had a scheduling conflict last week. It happens. It happens. We hope to be back next week on Tuesday. That's the plan anyway. Things can change, but stand by. As always, you can talk to me and Straza on Twitter. He's S Straza on Twitter. I'm Options Sean. We do a variety of Twitter spaces. You could even chat with us online if you want. Happy to have you guys on. And hey, Straza, I know it's starting to get warm down there in Florida, so make sure your air conditioning's working, all right?
I know, dude. It's very important. And also, I would just like to throw in special programming note here on Stock Market TV, starting a morning show tomorrow morning. Myself and JC will be co-hosting it from 8:30 to 10 every day. Sean will be dropping in with us just about every day, I think. Right, Sean?
If you'll be so kind to have me, sure.
We're going to figure all that shit out later. Sean's going to be there. You know, Ian's going to be there. Our guest tomorrow is Brian Shannon. So that's exciting. So come on by. That will be hosted on the YouTube channel at 8:30 tomorrow.
Where can people find that YouTube channel, Straza? What's
Stock
it called?
Market TV.
So youtube.com/Stock Market TV. Is that it?
That's it.
All right. Excellent. Okay, everybody. Have a great rest of your trading day. We'll talk to you again next time. See you later.
Later.